Welcome to the Real Money Show, the number 18778 Silver, the website, guildhallwealth.com. We're recording the show today on Thursday morning, so there's still lots of things to happen this week, Jerry, but we've got already a very interesting week in the gold and silver market. The numbers, 18778 Silver, the website, guildhallwealth.com. My name is Jeremy. I'm joined by Jerry Correa, and gold closing just shy of $2,200 an ounce. Overnight we break 22, and I was just reminiscing to myself, Jerry, that a couple months ago we were barely hanging in at $2,000 an ounce, and people were very worried about that. And it was, we had to point out to them, hey, we're sustaining $2,000 an ounce, and within a couple months we're already at $2,200. I mean, just think about a time when gold was moving over $200 in a couple months' time. That is absolute craziness, considering there was a time where it was only moving $200 a year at best. Silver, on the other hand, still trading below $25 an ounce. Incredible opportunity. I truly believe that gold is going to pull silver higher, that there's a psychological level here, that the $30 level is being defended, and we're going to talk about that a little later in the show, because we want to discuss the cocoa market, the arbitrage that's going on between East and West, or West and East, I should say, and HSBC has come out with a new vehicle for quote-unquote investing in gold, which we're going to talk about later. And that goes along with the theme of the demonization of the market in precious metals as well. So, Jerry, what was the week like for you?
The week was very busy, Jeremy. It was a short week, obviously. Happy Easter to everyone celebrating. It was a short week. As we were recording on this Thursday, we're looking at the markets. They're up on the week. It was rather lackluster last week. We saw the prices peak over 2,200 last week, 2,220 for gold last week, and it looked as though silver was going to hit the $26 mark, but once again failed on that. Silver looks to eye that $26 mark, which is a key resistance zone. Gold looks very strong above 2180. That would be the support level. Below that, there's a very big gap below the 2180 mark, so watch 2100. I'm watching the US dollar index as the anticipation of upcoming rate cuts is the talk of the town. Inflation data came out, and GDP figures came out again this morning, a little bit higher than anticipated. Nothing big. The big data, though, we're following the Fed. We got to see what the Fed talks about and decipher what they're talking about. It's very hard at times to figure out what they're saying and what they're trying to say, especially the news here in Canada. Just this week was the Ontario budget, and I was listening to the news on this station a couple days coming into work when the Ontario budget was being passed, which basically said, because of lowering inflation in Canada, we were seeing the inflation, the phony CPI data coming down lower and lower. They're really doing a great job, guys, bringing inflation down. So the Ontario budget has to make these adjustments. Whereas a story after that on 640 broke that the strike at the AGO that's happening, thousands of people going on strike this week, all because of rising inflation. So we have rising inflation on one hand for the workers,
for the real world,
but you got lowering inflation for the oligarchs and the bureaucrats, right? So it's a big disparity. People are seeing through it, and people are getting gold, and as we should as well.
Well, and as you're talking about the Canadian economy in that respect, you've got the Bank of Canada is now saying that Canada's economic productivity has become a national emergency because we are in a population trap. We are experiencing inflation. Why? Let's never forget the reason why we are experiencing inflation. It doesn't come out of nowhere. It comes out of all of the debt that you've created and the money that you've created. So all of the money that got printed, not just during COVID, but during the 2008 collapse and funding all these budget deficits and funding all of the debt. This is what's caused inflation. It is more money chasing the same amount of goods, and then you add to that the growth of the population chasing the same amount of goods, and you have a recipe for your your lifestyle not growing.
And that's just one ingredient to the recipe, the monetary policy failures happening at the central bank level, not to mention what's going on at the fiscal level, where we're 2 years in this Inflation Reduction Act, which was inflationary,
In the
things that
States,
are supposed
yeah.
to in the U.S.
Yeah.
And not to mention what's happened here in Canada with the clampdown in the oil industry. You're stifling productivity, but you're wondering why productivity is at emergency level right now. Well, get the oil pumping.
Yeah, and then not only that, I'm sure you saw what happened in Texas. They had a hailstorm and it destroyed what looked like thousands of acres of solar panels. And it was ghastly to see this thing, because you're just looking at beautiful land being taken up by solar power. It's just it
doesn't make sense.
It is an ugly sight, and that is not going green. That is not the vision of going green, and everything with this ideological approach is just wrong. I mean, they were putting in something like $8 million to see how climate change has affected people's views of democracy, things like this. It's just absolutely all these different ways to spend money. But you know what? The truth comes out.
And it was a busy week. A lot of things going on with, all these crazy things, Jeremy, with the bridge and with P. Diddy taking a flight. We're being bombarded with a lot of news. The news cycle is being jam-packed for Canadians. I think Canadians are feeling the anxiety level going up. They're concerned. The meetings that I had was a lot of concern. Can there be another lockdown? The RCMP is warning that Canadians, because of the tax coming up on April 1st, this coming Monday, this is going to see a lot of closures. Small businesses are going to feel it. Medium-sized businesses, people, families are going to feel it. And maybe can people wake up to the point where can we see Canadians riot?
Listen, I got to tell you something. I was on X last night, and the David Suzuki Foundation was saying that the carbon tax is only going to affect something like 0.15%. And I'm thinking, you guys have always been paid. You guys are a bunch of shills. This is my opinion. But I remember when David Suzuki back in the early 90s or late 80s was screaming it was the 11th hour because of acid rain, and then there was the ozone layer, and then there was this, and then there was that. And we know that there is a network of paying off scientists to get the numbers that you're looking for, right? And that it's a deaf, dumb, and blind thing that you're seeing right now. And there's the real world where people are going on strike. As my dad says, wait till the garbage workers go on strike. They'll be next, right? You had the what was it, FedEx? It's like, oh yeah, or Purelator, we'll give you raises. Everyone got raises, great. Who's fired? Yeah. A bunch of people are going to get fired. There's only so much money to go around, and you've got to be very particular about where you're going to put your hard-earned money now. And one of the best places that you can put your hard-earned money is into real money, which is physical and has always been around and outlasted other civilizations. That's how good the money is. I saw this piece. Maybe we'll get into it a little bit in the next segment here, Jerry.
Let's do it.
Talking about the debt to GDP.
Yes.
And that the debt to GDP levels of 130% debt to GDP, there's been something like 53, I'll get the quote in a few moments, 53 countries that have had it go to that level. And I think it was 52, and 51 failed, right? When I first read it, I thought, oh, you've got a 50-50 shot. No. You have like less than a 10% shot of your currency not collapsing with these GDP levels, debt to GDP levels. So you need to protect your wealth. They're coming after you in so many different ways. And a lot of it is disinformation, demonizing gold.
Yeah. Right?
Everyone loves BlackRock because of this ETF. Wait till you hear what we have to tell you about BlackRock and their collusion with the Fed, number one, and number two, what they think of gold right now. Meanwhile, gold is up $200 in the last couple months. It is going to protect you. And wait till you see what silver does in a way of giving you your inflation rebate. Because we have not even started in the precious metals market. It's been great so far this year. We are not getting started. Wait till they have to make a choice between raising rates further to fight inflation or dropping them to fight the economy.
Yeah.
Right? They are backed into a corner. This is not going to end well. You're going to see more financial repression, more money printing. And if you don't see the money printing, you're going to see the rates dropping. Either way, you're going to get more inflation. So you're going to have financial oppression, inflation. How are you going to protect yourself? You need to put it into something physical, tangible. If you cannot hold it, you do not own it. Physical gold, physical silver, and that's what we do at Guildhall. We want to help Canadians. We want to see Canadians thrive through this opportunity, which feels terrible right now. It feels hard.
It is an
but
opportunity.
There is an opportunity to build your wealth right now, protect it and build it. You give us a call. We'll show you how to do it. You can even do it in a registered account. The number 18778-SILVER, the website guildhallwealth.com. Jerry, 30 seconds. What are your thoughts on all this?
Just going back to the whole carbon tax, it's a big worry. And, when David Suzuki says it's only going to impact about 0.5% of the population, I guess everyone else is a liberal because the liberals got the 23% pay raise to combat the raising of the carbon tax. So people can weather the storm if they're getting the pay raise of 23% for sure, but the average Joe is not going to get that relief. And the average Joe is taking the wheel of their wealth for themselves, and they're doing something about it, and they're give Guildhall a call, and we're helping to help navigate and paint and tailor the best solution for them in the hard asset space. So give us a call.
The number 18778-SILVER, the website guildhallwealth.com. More to come on The Real Money Show on 640 Toronto. Welcome back to The Real Money Show. The number 18778-SILVER, the website guildhallwealth.com. We want to get back into this debt issue and how it's going to relate to the gold and silver market. But first, Jerry, I just want to get your comments on the this tragedy with this bridge, the Francis Scott Key Bridge in Baltimore, because if you didn't know any better, you'd say that was an economic attack, because it's a huge port. We're talking billions of dollars going through there. I was listening to Bix Weir talking about LME vaults in Baltimore with nickel and copper and other non-precious metals that are stored there. And just imagine the scenario. Sorry, sir, we're not delivering right now. We have no way of transporting the product out of these vaults.
Yeah, exactly. Aren't you watching the news? Haven't you seen on the news?
Yeah, haven't you seen? We can't get it passed. So it's certainly, when you put it into these contexts, you could certainly see it as an economic attack in many respects. And by the way, that's not coming out of nowhere. Jim Rickards, in his book, Currency Wars, I think it was his first book, talked about exactly that. He said he talked about, and he ran these game theories with the CIA at the time, and it was all about economic warfare. How do you create economic warfare? And it could be manipulating markets, manipulating currencies. This is where it's gone kinetic in many respects, but who knows? Who knows? But I can tell you this is going to have ripple effects, and don't pretend like this is transitory inflation. Mm-hmm. This is going to pull us back to that period of transitory inflation when, we're distribution lines and shipping lines and things like this are all going to be disrupted because of what we've just gone through. That's what this causes.
Mm-hmm. This is a big story. This is not a story that's going to go away. This is a story that's going to stay in the media. Stay in the news cycle, especially with the economic downturn that's coming. It's going to be used, and this is in my opinion, this situation is going to be used because it is such an economic hub, an economic artery, that bridge alone, feeding thousands and thousands of people into the metropolis. This is a major issue, and this can be used, call it what it is. In my opinion, it's a scapegoat. This can be the reason why we're seeing. It's not because of our policies, guys. Don't you see what's going on at the bridge? It's because of that situation. So anyways, I can digress and I can go on to this, into my theory. This is going to be in the news cycle.
All right, let's get back to debt. So I wanted to bring up that quote. It's actually from who else but the Kobasi letter. It says, how out of control is U.S. government spending? Quote, Since 1800, there have been 52 countries that saw a debt to GDP above 130%. 51 of those countries defaulted. Currently, the U.S. has a debt to GDP ratio of 124%, which is up 20% since 2020. The U.S. will be above 130% threshold by 2033. I think that we're on a quicker trajectory than that. Meanwhile, the $1.2 trillion budget was just passed, and the debt ceiling is uncapped until 2025. So I ask you, which they're putting out the question, how is this ever sustainable? And you've got something here from George Gammon, who's a great analyst in the market on YouTube. His whiteboard stuff is amazing.
George responded to Zero Hedge's post. The post was on the U.S. debt, which surpassed $33 trillion for the first time. This was a post last year, September, that when the debt passed $33 trillion. It took 3 months for them to add $1 trillion in debt. And Zero Hedge reported today that the interest on the debt exceeded $1 trillion, is now $1.1 trillion. They added $100 billion in interest payments within 5 months. And it caused George to ask and to comment, the debt is, the quote unquote debt is unsustainable narrative has been around for 40 years plus. What's astonishing to me is how the people who push this narrative never ask themselves, quote, why has it been sustainable for so long? It's been 40 years, quote unquote. The markets have been wrong for 40 years obviously isn't the answer. And it isn't the answer. It is not sustainable. It is going to happen. And the debts, as you say, as we say here, Gil, the debts don't matter until they do. And it's a very good question. How can the U.S. and other countries have lasted this long, 40 years plus of this type of trajectory? Trillions, quadrillions in derivatives. We talked about that. This is not going anywhere. You can't just delete it.
So how do they do it?
And I gotta it just dawned on me what Morgan Stanley wrote last week. And it was their article we talked about that Morgan Stanley is warning de-dollarizing could spell trouble for U.S. stocks. Not just the U.S. stocks, but everything that the U.S. dollar represented. Strength, opportunity, trust, liquidity, financing the U.S. deficits, affordable energy, importing low import inflation. All of this because the U.S. had the hegemony on global currency. If you had the world's reserve currency, you can do no wrong. The minute that the U.S. dollar loses the trust and credibility, which is what we're seeing, this quote, this terminology, this new theme of de-dollarizing. The U.S. dollar is no longer on the world stage. It's no longer being traded and being treated as though it should be on the world stage. When Saudi Arabia says we're not trading our oil for U.S. dollars anymore, that's war in the eyes of U.S., but they can't do anything about it.
So let's talk about how they were able to sustain it for 40 years. So we just went through a decade of low interest rates. That's how they did it. They didn't have to worry about the debt. That takes care of 10 years right there. Another 10 years is probably going to be the fact that they were living off the credibility of the U.S. dollar itself, right? Oh, yes, they've got these debts, but it's okay. It's the U.S. dollar. They've got the network. There's the military. Anytime that's a great one, Jerry. Anytime that there was, look, why is the BRICS being able to do the BRICS now? Also, a big part of that is, and this is the fall part of it, is that the U.S. never weaponized the dollar. They never weaponized it against anybody. So it could allow people to continue to allow countries and sovereign to continue to use it, but then they weaponized it. And whenever in the past, you mentioned the military, in the past, anyone who wanted to go against it, let's say Gaddafi wanted a northern African union, like the euro kind of thing, or when Saddam Hussein threatened to start using the euro, they would feel the might of the U.S. military.
Right away.
Another thing would be you've got all this money that you're printing, and what do you do with it? Who are you paying? You're going to pay for the shills. You're going to pay for the mainstream media to give off certain information and make things look good. You're going to pay to change the methodology in how you see things, right? In terms of the information on the stats. So we're going to kill what we would call inflation, right? Jerry, you can pick up on that in terms of the numbers. And then as well, we're going to kill the gold market, right? Again, this comes back to the demonizing of gold. You don't hear about it on the mainstream media, right? They won't talk about it. I've personally witnessed people being pulled off CNBC because in the gold market because they were saying things that they didn't want to be known.
Oh, they got hooked.
And anyone can remember what was it, like the 2012? I think it was 2012 elections when Ron Paul was up there, and whenever it was his turn to speak at the debates, they'd cut to commercial, right? Because this is a guy who's going to talk sense about the dollar. So these are the combined things that they've been able to do, but there's so many signals now of it falling apart. You've got the society is falling apart because you all of that money printing is now you've got the financial oppression out of it because you've printed so much money. Inflation's happening. You've weaponized the dollar, so the BRIC nations are saying, okay, well, we don't need this then. We're gonna get rid of the dollar. All of these things are starting to happen that you can't avoid. Even if you mess with the numbers, you now can't avoid them. Even the warped numbers are starting to look bad.
So, just you've listed off an immense amount of tools in the Federal Reserve and the fiscal toolbox to try to manipulate things and try to keep the U.S. Credibility alive, or the U.S. usage alive. The credibility is shot now with de-dollarization. It just reminded me of a Swiss Army knife. They were literally employing all of these strategies to try to keep the U.S. dollar relevant. Now that the relevancy is failing, does the U.S. or does the globe and the U.S. dollar have any more tools in the toolbox, or any more tools in the Swiss Army knife, in your opinion? What more can they do?
I think at this point they're on the run, and you've got still things like these economic things happening that are pressuring. I think there's a lot of things happening behind the scenes. I think that the BRICS are moving quickly towards gold. I think that if you look at what's happening with BlackRock, for instance, you're starting to see true colors coming out. BlackRock CEO Larry Fink says gold investors hurt capital market development. Oh, okay, so he loves Bitcoin because pulling people into that, and who knows what kind of rug pull that people were buying in at the top because it's pulled back. That doesn't stop it. I mean, this even on its face is crazy. You're saying that capital formation in the form of savings is bad for market development? That's a retarded thing to say. That's a retarded thing to say, that capital formation is anti-markets.
Right.
Now, this is coming from BlackRock, who now works with the Fed, right, to do operations.
Oh, we know who BlackRock is.
Right? So let's not pretend that BlackRock is your friend. And this is why when they were doing all this ETF stuff, we were kind of saying, guys, be careful who you get into bed with in terms of loving your enemy and things like that, Sure, enemy and my enemy is my friend, whatever. But it's just one of these things that, and now we see HSBC is demonizing gold in a way, or I should say ravaging it, because they've just launched a tokenized gold. I don't know if it's ETF. It's just a tokenized gold product, which sounds good on its face.
Very interesting timing.
But at the end of the day, it's the same thing that anything else is, which is, do you own it? Who owns it?
Another risky product.
Right? They are the ones who are shorting the markets, right? They're the ones who are hedging in the gold market. They did the hedging for the U.S. Mint.
That's correct.
That won't deliver U.S. Eagles. That have just stopped production. When it gets to be too much and they're selling too much, they just stop production, which is illegal. Constitutionally, they need to keep supplying the market. So, people need to realize that gold and silver are real money, and that all of these things are going to be found out and they're being found out every single day, and the market's telling you what's happening because gold and silver are rising. You know, gold is up, silver's up. There's an arbitrage in Asia happening. And last comments on that. I mean, you can see it all happening.
Yes, and it's not
it's just that you have to be awake enough to it that if you're still have your eyes glued to BNN, you're going to miss it because they're not going to tell you to be involved in this market. And there was even actually a study we'll talk about in the next segment where the World Bank came out with a 72-page report. I'll show you some of the tweets. The guy read through it, all 75 pages. Oh my gosh, this thing was like begging you to get into the gold market.
Mm-hmm. And comments coming from Fink from BlackRock, comments like that trying to dissuade or even demonize the gold market, similar to a headline that talked about mining in China. There is an investigation about these mines, that gold mining company in China, their gold is being mined by child labor.
Right.
So another demonizing story on gold. This is a signal for me that we're over the target. Keep your eyes on the gold market, as everyone is, as HSBC is.
Listen, we're all very sensitive to child labor.
Of course.
Which is why people need to consider where their car batteries come from and their electric cars. The number, 18778-SILVER, the website, guildhallwealth.com. More to come on The Real Money Show on 640 Toronto. Welcome back to The Real Money Show, the number 18778-SILVER and the website guildhallwealth.com. At Guildhall, we only handle physical precious metals. It has to be LBMA approved. That's London Bullion Market Association. And what that means is that the product is being sourced ethically. It's being refined to the proper purity, fashioned to the proper weight. It is, and the companies and the refiners and mints can handle global business. What does that mean? It means that there are different types of products out there. There are products that you could get that are going to be a lot cheaper. But when it comes time to sell, is it going to be a product that's globally recognized? And so what we do at Guildhall is we handle only globally recognized product. And these type of products are also what's known as RSP eligible. An RSP eligible product, like LBMA approved product, maximizes your liquidity. You know, when we're talking about this HSBC tokenization of gold, you do not have liquidity. You're forced to trade at certain times of the day. That it can also be the type of trade along with ETFs and these sort of passive vehicles that when the time comes that you really want to get out of the market, can you? Because there's too many people vying for the exit on a big barge, because that's what these investment vehicles are. Whereas if you own it, you can take it to anywhere. You're
already out of the market.
If you have it in a vault, you can pick up the phone and sell, right? And do we do those things outside of market hours? We can. I will say that we can. It would be discretion because it depends on what's happening in the market, but it is a market that trades 24 hours a day. So you do need to figure out how to create maximum liquidity. And a lot of these vehicles don't offer that. So along the lines with physical precious metals is the move towards assets in general. When you realize that what you have in the bank is not actual cash and you can't pull out all the cash, what is it? You're a liability to the bank. So people want to own real things during this period, right, Jerry?
100% real assets versus a time when we are so digitized. Everything is digital. The money in the bank that we have is digital. The stocks is digital. It just continues. And when you have banks going under, we had 5 bank closures in 2023, more to continue. And, we're talking about HSBC issuing a gold token. We just have to remember the great financial crisis, what happened to this bank. And when an HSBC bank or a bank like that crashes like it did during 08, 09, there will be big trouble when you try to convert your digital whatever asset that you own into genuine, real, tangible assets that have stood the test of time. And one of those assets would be arguably a natural fancy colored diamond, a Guildhall natural fancy colored diamond, one that passes the heights of the highest criteria. A Guildhall diamond meets all of the highest C's. And we have an amazing auction coming up in Hong Kong, coming up on April the 6th. The Sotheby's...
Not us, but Sotheby's, yeah.
Yeah, Sotheby's. There's going to be a jewelry sale in Hong Kong next week during its luxury week. And the focus of this auction, of the show, is color diamonds, Jeremy, and your comment on color diamonds.
Well, I think that you're seeing at auctions over the last year and a half have been seeing more and more of the natural fancy color diamonds. And it's also jewelry that the very wealthy are investing. They consider these things investments. They have a lot of wealth. Where do you put it? You can only have so many bonds and so much gold and so much of this and that, houses, etc., that they see these things as places to put your wealth as well. As long as it's very high end. We're not talking costume jewelry here, right? So these are highly prized assets, and they're usually quite large.
Yeah.
But they tell you a little bit about where the wealthy are putting their money, and tells you a little bit about what's happening in the market. And what's been beautiful about the natural fancy color diamond market is there is no leverage in the market. It's always owned completely outright, completely private. You don't have to involve a bunch of people in these type of acquisitions. They are portable and very strongly concentrated wealth. And so it's a great place to put wealth, and they've performed very well through every major crisis. And now they're not liquid like gold and silver, but that's not the point.
Mm-hmm. I couldn't agree more. It is a way to store the value versus the loss and the current acceleration of loss of purchasing power. And the savvy and people who just are into classy items, they're looking at rarity and they're parking their assets as they have time. We have some time now to find those assets before inflation really picks up and hyperinflates. I'm not suggesting, but we're just preparing. And having an asset that is this rare, and the thing that I love about this market, Jeremy, is we all want free markets. When we have manipulation in every single market, we have a plunge protection team to protect against a drop in the market. This is not a free market, but when you see the auction and the process of an auction, we're seeing a natural free flow of money coming in for a very specific reason. You're looking at the diamonds that are being released. We have a 10.33 carat fancy intense orangey pink VVS1. It is going to probably fetch approximately 3.2 million to 5 million. Another pink ring is going to probably fetch 4.8 million. So this is where the money is going. And, something similar. Obviously, these are uber wealthy, and you can get something very similar, a little bit smaller in size here at Guildhall for a fraction of the price.
Yeah, I mean, we can offer things that are worth millions and have access to those things, but I'll give you an example of something that we have that is very special. A 1.43 emerald cut, intense yellow, internally flawless. Now, emerald cuts are going to show every single flaw because you can see right into that diamond. And the one that we have is internally flawless. It's also not just an emerald cut, but it's a square emerald cut. So it's going to look beautiful in jewelry. Harry Winston, he is famous for designing the emerald cut along with baguettes on the side. So it's something that could be in jewelry as well and enjoy. A diamond like this was selling for under $30,000 a little over 10 years ago. Today, it's going to sell for a little over $40,000. So you can see that that an asset like this, you hold it, it's only going to continue to go up in value. And if you compare that to the white diamond market that has been completely destroyed by synthetic, which, by the way, France will not call it anything but synthetic diamonds now. If it's man-made, it's a synthetic diamond. Mm-hmm. And they're usually good with those labels, like their wines and stuff. But the synthetic market has destroyed the white diamond market. The white diamond market is really struggling, but the colored diamond market is so rare that you can't, it's very difficult to do that because collectors know what they're looking for. And a diamond like this, as an example, of a 1.43 emerald cut, intense yellow, according to the Fancy Color Research Foundation, between 3 and 6 diamonds a year matching that criteria will come to market.
Wow.
Now, it doesn't say that it's a rectangle, a very narrow, a deep, a shallow diamond, it just says internally flawless, emerald cut, intense yellow. You're looking at well under 10. And I would imagine if you handicap that to something like what we have, you're probably looking at maybe one a year if you're lucky. And over the past 15 years, we've had 4 diamonds like that at Guildhall. Two were vivid. One was under a carat. And we've had 2 intense. One was over 3 carats, I believe, and this one. Mm-hmm. So great opportunity, definitely. So
looking at various ways of diversifying one's portfolio, why wouldn't you want to have something this rare, this beautiful, and this stable for your portfolio? So give us a call. Find out how to get a color diamond in your portfolio to complement what you already have in your silver and gold. This market's going one way. Stagflation is here. We're seeing commodities booming through the roof right now. There is a massive squeeze happening, and we're going to talk about that in the next segment, Jeremy. But great times for color diamonds. We had a little bit, with the lockdowns, there's a little bit of quiet time, but things are really picking up. The auction houses are showing that we should be excited in this market, and I'm super excited in this market for myself.
The number 18778 silver and the website guildhallwealth.com. More to come on The Real Money Show, 640 Toronto. Welcome back to The Real Money Show, the number 18778 silver, the website guildhallwealth.com. Remember, at Guildhall, if you can't hold it, you don't own it. You can contact us. You can start small. We always recommend, if you're new to the market, start small. Markets don't go up in straight lines. There's going to be ups and downs. But if you're a stacker, if you're thinking long term, don't worry about it. We don't see major crazy moves until the market really tops, and we are far from the top. And of course, you can call us, and we're happy to discuss these aspects of the market with you. But you can hold it physically. You can take delivery. We have access to a BRICS vault where you have a sub account. It's fully allocated, fully segregated, completely liquid. Take delivery anytime. Go visit the vault whenever with an appointment, whenever you want. There are some protocols for security, of course. And within the registered account, RSP, TFSA, Lira, LIF, RIF, RESP, first-time home buyers. You can own physical gold in all of these things. And just think about it. Over the last 20 years, gold is up well over 450%. Silver has a long way to go. Imagine if you were holding that for 20% of your portfolio. Because, Jerry, I told you that there was that Ronnie Stoefferl went through the 72-page report put out by the World Bank. And it is pretty amazing. And I want to read a couple of his notes because he put it all out on X. And I just wanted to highlight a couple of them. One is gold purchases by active diversifiers frequently coincide with political, economic, or financial shock. This lends credence to the notion that geopolitical events influence gold price movements. We do know that, obviously. Another one is he talks about having a small allocation to gold can minimize the downside risk of a standard stock bond portfolio, and it creates lower volatility in that portfolio. And then it goes on to say that if you have a longer outlook of more than 10 years, that you can up the percentage in your portfolio. And this is all coming out of the World Bank. Basically, again and again through this 74-page report, it's saying how good it is to have physical gold in your portfolio to diversify against economic risks, to diversify against equity volatility, and basically give your portfolio additional liquidity. So amazing report, and that comes from the World Bank.
Good on them. Good time to report that, considering there's a lot of disinformation and dissuasion against the gold market for them to highlight the gold. Not like Bloomberg this week. Bloomberg actually did highlight silver this week. The case for silver is on. Everyone's looking. There was big money piling in. ETF is going long on gold and silver, in fact, switching up. But Bloomberg actually writes, you can get into silver, please do so, but be careful, guys. The reason that you should be careful is that the big catch is there is a quote unquote, as this, his name is Mr. Sway. He is the Deutsche Bank specialist there, a commodity specialist. There's still too much stock of silver above ground in the form of scrap silver. So when we talk about supply and demand, we have data 7 years straight of deficits coming out of the ground, yet Deutsche Bank guy says, we got too much silver, guys. This could be a dangerous catch. You guys have to, with a fine-tooth comb, filter through the noise and make the decision yourself. Is this market undervalued? And if we look at undervalued assets, we're looking at stagflation takeoff. It's Easter time. Everyone's buying unaffordable chocolate. Why? Cocoa is up over 10,000, higher than copper prices since 2003. Stagflation is on. Not just because of production issues of cocoa in West Africa, government issues. There is a short squeeze happening. Just 2 weeks ago, cocoa was the sixth most shorted commodity behind precious metals. You have silver being number one short squeeze, platinum, gold, palladium, coffee, and then now cocoa is up on that list. What this is signify, it's very much like the 70s, a period of stagflation when all commodities went up, including gold and silver. This is just a 5 times run so far in copper. We still have a 10x run to go, and this could be the indicator that stagflation is going to continue to rise, especially for the big silver squeeze market. The silver market's going to be squeezed higher to levels that we have not seen. So we are in the third cycle. We are in stagflation. The gains are here to come. Survive with precious metals, but thrive with your silver and gold and a natural fancy gold diamond in your portfolio.
Well, that does it for the show. If you've missed it, you can catch us on YouTube. Follow us on X. A lot of good stuff being put out on X. So much stuff. I think by the way, cocoa, the short in cocoa, you're going to see that in silver. It is the biggest short in the world. Silver market, tiny market. It's going to go to the moon at some point, and we don't know what the trigger is going to be, but you want to have a little bit in your portfolio for sure. The number, 18778-SILVER, the website, guildhallwealth.com. Thank you to all our listeners for joining us this week, and we can't wait to speak to you next week here on The Real Money Show on 640 Toronto.